Welcome to those who already joined to another one of the Disrupt digital events. As you know, we had to take everything online because of the current crisis. Today, we're going to be having two speakers, Filipp and Rebecca from Define and Unbound Tech, respectively, present their views and solutions on custody of digital assets. Before I hand over to them, I want to explain one tiny logistics aspect of this conversation. There will be a Q&A, and to ask a question, just join this WhatsApp group. You can scan it with your phone scanner, QR code scanner app, or the iPhone camera app that works as well. Maybe you are already in the chat if you've been to one of our events before. So there you can just post a question anytime, and then at the end of each talk, I'm going to read them out, or if Filipp or Rebecca are in the chat, they can check this as well and answer your questions there. And obviously, as always, we hope to carry on the conversation after the talk is finished to build a community around these tech topics. So without further ado, that's it from my side, and let's bring on the speakers. Okay, I think Filipp was first, right? Yeah. Can you share the screen?
So do you see my screen now?
Yes, wonderful.
Great. Okay, hello. Thank you, Jan, for the nice introduction, and thanks Disrupt for having me here. It's a pleasure to talk for me. My name is Filipp. My academic background is in mathematics and in cryptography. And during my PhD, I dealt with topics like multi-party computation, zero-knowledge proofs, and related topics. Currently, I'm also doing another postgrad in cybersecurity at the University of Oxford. And since 2.5 years now, I'm a blockchain developer at Define. And there I mainly focus on projects around custody of digital assets. So this is also what this talk is going to be about, or more on the agenda. We will go briefly about the introduction about Define and see then what basically is custody in general for digital assets. And in the final two parts, I will show you how we Define have built up a prototype based on Unbound's and PC solution to implement some prototype custody solution. And I will guide you through a short demo then. So let's begin. So who is Define? We are actually a European leading consulting company. We have more than 900 consultants now, mainly with the backgrounds in natural science like mathematics, physics, but also others. And what we work on is mainly in the areas of finance and industry. And what distinguished us from other consulting companies, importantly, is that we have an hands-on approach. So we don't do just conceptual work, what we also do, but we go to the clients and make the technical stuff. So we really do implementation of highly tailored, customized software solutions for customers. Since 4 years now, we also have a business unit that deals with blockchain technologies and digital assets. And our engagement there can be subdivided into 3 parts. Mainly, we do platform solutions. For example, we do capital debt market platforms based on Hyperledger Fabric. We do pay-per-use applications based on Corda. So this all deals kind of with permission blockchains. We also support clients in building new ecosystems for digital asset services. And among them, we do projects for implementing custody solutions for digital assets. That's what this talk is going to be about. What we also offer is tokenization services and security token offering services where we build up the technology for the customer. So we have really everything in-house, from building up the technology, doing the concepts, shipping the technology. We have also smart contract developers in-house. So we do a lot of programming and technical stuff and conceptual stuff as a whole service offering. So let's now go into the talk about the custody solution and the challenges here. So what is actually custody and why do you need it? On top you have users without technical background, without technical knowledge. They want to access the cryptocurrency market, digital asset market. They want to handle with blockchain somehow, but this stuff is kind of complicated sometimes. You have to keep private keys. You need somehow to be in there. So what do users do? They usually register at an exchange, and at the exchange they can start trading. But also this exchange, it must handle this safekeeping and operation of private keys, because private keys, they are at the baseline of blockchain. Without private keys, you cannot sign and operate transactions. So they all rely on custody solutions, actually. And there is a challenge how to actually safekeep and thereby maintain operability of private keys. So here custody serves kind of a gatekeeper for all these users and services to the layers below. What actually constitute a good custody solution? So we have, of course, core services on the left-hand side, which is about the safekeeping of the keys, about operations like transaction processing. And on the other hand side, we also have some kind of unique selling point building services. Because the left-hand side, it's only for building the foundation. This is the core essence of custody solution. But to distinguish oneself from others, you have to do some kind of USP points. And here, for example, you can do some blockchain servicing. For example, if Ethereum comes out with the proof of stake, you can have services for staking the funds of your customers. So the funds that the customers have on their accounts anyway, without moving them, they could use it for staking in Ethereum and thereby make more profit. And of course, the custody solution or the custody provider would profit from this as well. So here are the USPs that the custody solution custody provider can offer. So what are the critical requirements here? Actually, we need to assure as a custody provider that we are always agile. And with agile, I mean agile in every kind of aspect. Because there are always new technologies coming in, new blockchains, new assets on blockchains. The ecosystem is developing. For example, if a new blockchain comes out, it might use completely different technologies for signing than existing blockchains. And you need to be able to adapt that. Also, with novel laws can come out. So you need to incorporate or adjust your solution to these laws to be compliant. So this means also that when you build up a custody solution, it must be extendable and scalable from the beginning on. Because, for example, if you start with only Bitcoin in mind, you concentrate your service on dealing with Bitcoin, making Bitcoin transactions, and then at some point you decide to incorporate Ethereum as well. Then it could be difficult because Ethereum, at some points, it has a different technology. So you need to have this kind of points in mind at starting the solution in order to avoid having to build your system from scratch again and again. And so this leads to the point where you, as a custody solution, it must be blockchain agnostic. So as much as possible. And one of the main critical aspects that I will talk about more deeply is actually the secure storage and the operability of private keys. So what does that mean? You have kind of these two extremes, security and operability. On the one hand, you can have a highly secure storage for your key, like putting it in a Swiss bunker in a safe, and it's highly securely stored. You can have guards there and so on. But it's quite unhandly, right? If you want to use your private key, you must fly to Switzerland, go to the mountains, go down to the bunker and take out your keys, and then you can use it. So this is not operable. And on the other hand, you can have quite a very operable online wallet. So you just store your key on a software as a service wallet and can use it at any time you like. And so the challenge here is to find a kind of balance between these two requirements, security and operability. And what we see there is a constitution of several levels of security. Like you can have a hot wallet, which is connected to the internet. You can have a warm wallet that is sometimes connected to the internet, basically only at usage. You can have a cold wallet that is never connected to the internet, but still has a bi-directional channel, like you provide the transaction input and get a signed transaction out. But you can also have something like the ultra cold wallet or deep cold wallet, where you don't even have an input there. So you have only a unidirectional connection where you just give the signature out. So these are all levels that also transition smoothly into each other. It's not kind of, you can subdivide your security levels into these 4 parts, but they transition sometimes into each other. Okay, the other critical requirement that I want to talk is how do you couple your business processes as a custody solution with the actual signing process. So imagine you have a business process where an unsigned transaction request comes in. The process starts with preparing a withdrawal. It does some anti-money laundering checks. It checks the limits. If the amount of the transaction does not exceed some existing limits, you make some internal blackbox checks, and then the signed transaction will come out afterwards by signing the transaction afterwards with your secure storage solution. So although you might have your storage solution really protected from any attack vectors, like it's fully secure and so on, you can still have attack vectors on the business process itself. For example, imagine you have a bad administrator who simply changes the details of the unsigned transaction, and then it changes the receiving address, and then the bad admin would receive the transaction. Or somebody simply does a hack on your system and changes the code for doing limit checks, and then an unlimited transaction can occur, or something like that. So we need some way to couple these kind of steps in the process with the signing itself in order to avoid this kind of hacks. And for doing that, we see mainly 4 solutions or 4 approaches on the market where technologies follow. On the one hand, we have multi-sig approach. So it's multi-signature, where you can have several policies, like an AML policy, anti-money laundering, you can have blacklisting checks, you can have limit checks. And each policy is kind of incorporated into bot code. The bot is running doing this policy, and each bot gets its own private key. And afterwards, a transaction is only valid or only validly signed if all these policy bots have signed themselves this transaction, and then it can be sent to the blockchain. Another approach could be a multi-authorization on the hardware security module. So you have your private key in the hardware security module, physically protected device that you can plug, which is certified and everything. And the policy bots, they check their policies, and when they are okay, they simply approve. So say it's okay, and then only then the hardware security module will do the signing with the private key. On the other hand, you can have secret sharing. Secret sharing scheme basically is where you have the key, or for the purpose of signing, you have the private key. Then you subdivide this private key into some parts. Each policy gets its own part. And then if the policy has done the checks, it will act in a process to rejoin the key again, and then this key can be used for the signing process. And the other point, or the other approach that this talk or this whole meetup is all about is the multi-party computation approach, where each policy bot is assigned a key share, And while signing, the policy bots participate in some interactive protocol with their key shares and do the signing, and afterwards the signed transaction come out. And importantly, without the shares ever come together. So the private key never exists in the clearing. How does that work actually, this multi-party protocol? Let's look at a simple example of a two-party protocol. The question here, or the problem here, is that we have 2 millionaires. They have several millions on their account, and they want to know which one of them is the richer one. So millionaire X has $7 million, millionaire Y has $5 million. Of course, they could simply exchange the information from their accounts. But the key challenge here is they don't want to disclose their actual account balances. So they want somehow a protocol or a process to know who is richer in the final end without disclosing their actual amount. And this is how they can, this is where this two-party protocol invented by Yao in the 80s, I think it comes in. What is basically done there, it's this problem statement, so who is richer, is kind of translated into a so-called garbled circuit, which is mainly a circuit consisting of logical gates that are encrypted in a special way. And after running this protocol, both millionaires receive simply the answer, okay, X is actually greater than Y, so millionaire X is richer. And a part of that, they don't learn anything else. So we can translate this solution also into the signing process, for example, a Bitcoin transaction. So in the classical signing process, you have an unsigned transaction. You input it into your signing process. You take the private key, you use it to sign it, and afterwards you get a signed transaction that you can send to the blockchain. In the multi-party protocol signing way, you would have maybe some policies deployed. Instead of just using a private key directly, you would assign these policies key shares, and then they would run this kind of distributed protocol in order to do the signature, to create the signature. And importantly, the key shares will never come together during this protocol execution. So in the final end, by MPC signing, you get the same signed transaction that will be valid on the blockchain as with the classic signing, but you never expose the actual private key. So no attacker can actually catch your private key while it's online for several amount of seconds or anything. So this is the key point here. So let's look at a possible example of an infrastructure for a custody solution, and mainly the integration points here. So for a custody solution, you would need some user connectivity, like a user interface, dashboards to monitor the bots for the policies, and so on. You need the processes, so the actual withdrawal process may need to be implemented. You need to do record keeping. You need to see how many transactions your customers already did. These kind of things must be incorporated into your solution. You could also buy in some secure signing technology and integrate that as well. You have also other integration points here. So as the custody provider yourself, you might have already some existing systems, an authentication provider, for example, that you could connect to the custody solution itself. You can have some anti-money laundering processes for your fiat currencies already, and you want to make them somehow work with your cryptocurrency anti-money laundering solution that you should build also, or incorporate. And on the other hand, you might also need to incorporate some third parties like market data providers or AML analytics providers that do the analytics stuff on the blockchain. You might have external blockchain nodes, and you need also to connect to the upstream services like exchanges. So, and this is where we as Define come in. We actually do or can do all these integration points here. We do the programming stuff, so we have experience with that, and this is where we come actually in. Our consultants can do this work. And so what I'm going to do now is I will show you a short demonstration of our solution for our prototype that we have built based on the Unbound crypto asset security platform solution, which uses the multi-party protocol signing. This protocol basically consists of a user interface of the app where the transaction is actually constructed. We have a bot dashboard because we also have policy bots in place as a signer. So we have basically one policy bot that is redundantly deployed with one policy. The policy is quite simple. We simply do a check of the amount and check that it does not exceed some limits. And we also have a human approver, which means that I will show you on my smartphone within the Unbound Cusp app how I check the transaction details and approve the transaction. And also we used HSM, so hardware security simulator, for storing the crypto material of the policy bot, because the policy bot, it also has to communicate with within the MPC protocol and to use the key shares for signing, and this crypto material is stored in the hardware security module simulator. So what we are going to do is we will log in kind of as a user into this interface. We will request a Bitcoin test transaction. Then the second point, we will approve the operation in the Unbound Cusp app. And then afterwards, we will verify in the dashboard that the policy bots have approved it. And then we will verify the transaction in the Blockchain Explorer. So let me just start this. Okay, sorry, I have some problems with my technology, but for this we have prepared the video. This is that I recorded some days ago, which shows basically the same. So check out the video. Here I am logging into my dashboard, which is the custody UI here. Here we see that we are logged in as a user. The user who wants to make the withdrawal, we check the details of our transaction. We make a Bitcoin test transaction. We take some small amount, check the destination address where we want to transfer these Bitcoins, and then we accept the transaction. So importantly, this is only a submission confirmation. It's not on the blockchain yet, as we see. Right, so there is not the new transaction is not done yet because I, as a human approver, did not approve it yet. So here I go into my app, which is the Unbound Cusp app. I check the details of the transaction. I check if everything is okay, if the destination address is not false or anything. I can choose to decline, but then I choose approve because it's okay to approve it. It's the correct transaction. So it's being approved. Now we can go back. We can check the dashboard for the policy bots. This is a Kibana dashboard, which is built on an Elastic Stack. So we have two bots for the same policy. This is a redundancy purpose. This is kind of for security. So these two bots, they do the same on the left-hand side, on the right-hand side. They check the transaction details. They check that the amount in euro, importantly, it's not above some threshold. And then they check that they say the transaction is okay, it's valid, and then they approve it. And after approval, they are part of the protocol invocation is done. And then if a high enough quorum has reached consistency, the transaction is actually signed and can be sent to the blockchain. And here we see that the transaction is actually done. Okay. So this is what I wanted to show. And then I'm at the end of my talk. And here I will be happy to answer any questions if you like.
Nice, thanks a lot.
Thank you.
Philip.
Thank you for.
Now, are there any questions? I didn't see any right now. So if you have a question, post it in the group and I will ask Philip this after Rebecca's talk. All right, then let's continue with Rebecca.
So good morning, everyone. Do you see the screen?
Yes.
Okay, so actually I have two types of media, I would say, to show today. One is the presentation, and I'll try to make it quite brief so we can get to the actual demo. Complementing the former presentation, I will actually, I would say, devote most of the time to the analysis of the ecosystem. So I think it would bring value to this audience. So let me start. Okay, so just a very brief introduction of Unbound and myself. My name is Rebecca Aspler. I'm Director of Product Management for the blockchain product line. I'm very privileged to be working for Unbound, where the co-founders are Professor Yuda Lindell and Professor Nigel Smart, who are both world-renowned cryptographers. And they are actually the ones, I would say, that have been able to optimize the MPC protocols a few years ago to be able to make them applicable. Up until 5 years ago or 6 years ago, MPC was very much an academic field of knowledge, very much established, very much appreciated, but one of those fields that people hear of and learn of, but don't really apply to the business life. Any MPC transaction, regardless of digital assets, 9 years ago or 10 years ago, took minutes to complete. And both of these people have been able to shorten this time to milliseconds, therefore opening the door for various business applications. Naturally, wherever the key is more sensitive, the applicability of MPC is more, I would say, fitting market fit-wise. So we've been able, as a company, using the protocols that are patented. We have about 11 patents and are registering today more. We've been able to gain the trust and appreciation of, this is a partial list of customers, as you can see. And you can see that our expertise are the more enterprise grade type of customers. We are very much welcoming and respectful of any customer, but we're very proud of the fact that customers such as IBM, Goldman Sachs, Citibank, Visa are the ones that trust us. As you can see also, we have FIPS 140 level 2 type of certification. To the best of our knowledge, we're the only software solution in the world that has this certification type. We cannot get the level 3 because it requires actual hardware, but we are partnering with other vendors such as IBM to bring HSM level 4 actually as part of the platform. We're also being recognized by Gartner as a cool vendor specifically for the blockchain product line, and these are our investors. So diving into the platform and then the ecosystem. So in a nutshell, the platform is such that it enables multi-party computation. This is in opposed to two-party computation. Philip has also mentioned that because there are quite other solutions out there that are experts in two-party, and to the best of our knowledge, we're the only ones that are doing actual multi-party. As mentioned, our VHSM component is FIPS level 2 certified. Approvers, as Philip very nicely presented, hold only key shares. No one holds a full key. The key is never comprised into its full entity. It is not Shamir secret sharing. Being a software company, regardless of Unbound, any MPC solution would be crypto agile because it's software. It's very easy compared to other technologies in the market to update the protocols and add new types of assets. With Unbound, it's a distributed policy validation, meaning there is no single point of failure. There is no somewhere one unique at the, I would say, architecture that validates the policy, but it is the situation where each and every one of the signers is validating the transaction using the raw transaction detail. We offer institutional grade policy controls, so you can build, and we'll dive into that later, very, I would say, custody adhering type of policies. There's a group of admins, features such as whitelist, etc. Now, being a software solution versus software as a service, we allow the integration of other vendors to work with Unbound and to integrate into your platform, because we cannot bring, you know, everything into the table. So we're working with other companies to bring you node management, to bring you KYC and AML expertise. As an example, we have a partnership with CipherTrace, a very known type of partner. As mentioned, I have a strategic partnership with IBM for the HSM level 4, and et cetera, et cetera. So Filipp talked about it. This is MPC in a nutshell, multi-party computation, where none of the key holders holds a full key, but all hold only a key share, and together they can compute a result, still preserving the zero knowledge proof of each party. Now, this is where it's beginning, I would say, to be interesting. As Filipp mentioned, there are various types of solution out there. So the four main ones are HSM that Filipp talked about. This is a hardware module, and we'll talk about the various parameters in a minute. I'm sure everyone is aware of the multi-sig and the vendors that are pushing it. Trusted execution environments are another type of solution, even though I would not dive into this today, simply because they are still suffering side channel attacks. And we also use them as another layer of security if a customer asks for it, but I don't think that anyone is relying solely on trusted execution environments. The mostly known one is SGX, but since SGX is of Intel, I would very much be appreciative of their efforts to, I would say, improve the product. So not diving into this today because they're still I would say, having some difficulties. But certainly another layer of security and a very appreciated one, and of course MPC. Now, another way to look at the market is also using this type of metrics. So if we talked about the technologies, now it's worthwhile talking about the type of solutions. So there are mainly three types. One is homegrown or do-it-yourself, that could be facilitated using external software companies or consulting companies. You could be doing that on your own. It has its advantages. This is a full customized type of solution to your own needs, but still it embeds within the higher TCO to maintain such a solution. You would usually, to the best of our knowledge, deploy HSM or multi-sig, less often the MPC, simply because I would say we're not, or we have room to improve our market education as to the advantages of MPC and its applicability of today. It is simply that people know more of HSMs and they have it already in banks, etc. There are, of course, the software as a service providers, as you know, BitGo, other MPC vendors, quite a lot out there. They have their advantages. It's really easy to go live. You could do that within 1 hour if you'd like to, once you know the account management has been settled. It's worthwhile mentioning the fact that liability is split between the vendor and the customer, because mostly the vendor would hold at least one key or one key share, depending on the type of solution. And you are dependent on the SaaS provider to add assets and features. I would say that quite a lot of our customers are ones that have started with software as a service type of providers. And after a year or so, if they have grown, if they've emerged out of the stealth mode or I would say early start of their days, they would usually come to us asking for a software security platform. They've outgrown, I would say, what the SaaS provider can offer them. But it's a really good way to start if you don't have the resources. With security platform, it's a security service. You deploy it on your premises, on your own cloud. You can, of course, use the very sophisticated and knowledgeable services of consulting companies such as Define. You could use the knowledge of Unbound as an example, but this is just another type of solution. Liability-wise, and this is important to mention, if you're concerned about control over the key and the security, which is a main concern for custodians, you cannot start with a software service provider. You have to go to either do it yourself or a security platform, because otherwise liability is shared between the various, I would say, people or entities that are involved. Now, these are the parameters that you may want to consider when deploying a solution or when deciding to close with another company. And now we'll start comparing the various, I would say, technologies using these parameters. As you can see, logically wise, we're speaking of two groups, security and compliance and operations. I think that most of the people on the line would consider both of the groups as equally important, and none can be defined as less important than the other. Specifically, I would say with custodians, when we talk with exchanges as an example, they would say, we need security. We can for now compromise on operations or compliance. Most of them are not even complying with any regulations. But when we talk with custodians, they would say, we need that. And therefore, these are the parameters, again, regardless of Unbound, that you would like to consider once trying to select the solution that is best fit to your needs. Now, let's dive into several of the parameters. I don't have the time to look into all of these, but we can share the presentation later on, and I want to get to the demo. So key confidentiality, always a tough word for me. As you can see, HSMs are experts in this. This is like their sweet spot. This is where they started. HSMs protect the key. This is pretty much like putting a key in a safe and not worrying about that. It is a challenge with blockchain, but we'll touch base on that in a minute. With multi-sig, the secrecy of the key is as strong as the ability of the signers to keep their key confidential, which might be a non-issue when you're serving, I would say, consumers if you're a B2C type of business, because the liability would be in their hands. But if you're a custodian, and just as an example, you have 3 keys and 2 of them would be at the investor hands, or 2 of them would be within the operation people at the custody department, you would be, I think, pretty worried if they are the ones that you need to rely on to be keeping their key secret. With MPC, regardless of NPC vendor, the key never exists as one entity, so therefore the secrecy of the key is a non-issue, I would say, because there is no key to steal. With blockchain, and this is really interesting, it is not just a key being kept secret in a safe, because with blockchain, you don't have to steal the key. You simply need to see it, pretty much like any password. If someone can get the hold of the key, whether it's in memory, whether it's being transferred over some kind of a networking operation on your side, you've lost the key, you've lost the assets, as simple as that. So HSMs, for that matter, and people might not be aware of that, are really bad when it comes to keeping people from misusing the key. And often we see consulting companies and the organizations themselves very much aware of this challenge, and therefore building above HSMs additional application security rules and security layers, which are trying to overcome this very, I would say, basic challenge. With multi-sig, it's a non-issue, pretty much like with MPC, because you need 2 or more keys when it's multi-sig, and with MPC, the key doesn't exist. So there is no single point of failure, unlike with HSMs. FIPS level 2 certification, HSMs, this is their holy grail. We often hear, even yesterday, I cannot disclose the name, one of the biggest banks in the world that we were on the line with, we started the conversation with them saying, you know, we don't have a choice but to go with HSM simply because they offer FIPS level 3. And then we started the conversation and we understood that it's more, I would say, of a comfort zone rather than a real regulation type of requirement when it comes to blockchain. I've been digging into the various regulations worldwide, whether it's the FSA in Japan, whether it's the German Banking Act in Germany, the custodian law in the US, none of them, I can assure you, requires HSM. They require technical means to protect the keys. They require the safeguarding and security measures. They require business continuity. None of them requires HSM level 3. So once you put that aside as the, I would say, baseline requirement, it's interesting to see that MPC specifically for blockchain, if we take out other considerations as already implemented type of systems, HSMs are not mandatory for custodians. This is simply the comfort zone, pretty much like, you know, no one has ever been fired for buying IBM. That type, I would say, of comfort zone. Crypto agility, this is a major thing. We did not know of that 2 years ago when we started the platform. This market is moving fast. Like just the fork that was happening a few days ago, the proof of stake type of coins, we know for a fact, and this is one of the reasons that we're gaining customers from other SaaS vendors, is the fact that no one can really predict which assets will be more relevant 2 years from today or even 1 year from today. The market is that dynamic. And with standard HSMs, the crypto agility is simply not there. You would have to upgrade the hardware when required. You would have to build all sorts of, I would say, bypasses type of tools to be able to overcome this very inherent challenge. And even if the HSMs companies do upgrade their hardware and their software to support new type of protocols and assets, it's going to be a nightmare to ship everything, to do upgrades, etc. This is not the old world or the traditional world. Again, not disclosing names, but we do know for a fact that other SaaS vendors find it more difficult to support new assets. Proof of stake type of assets is a really good example. This is a growing market segment. And we see that other vendors are very proudly, I would say, publishing PRs on adding a new type of asset, which is actually a testimonial of the difficulties that they're exploring in this area, because it takes them between 2 months and 6 months to add new assets. So if you know that you're about to start with Bitcoin and Ethereum and all the ERC20 type of tokens, and you're happy with that for the next 2 years, multisig is cool, HSM is cool. If you're in one way or another considering other type of assets, your own type of tokens, if you're planning on exploring the proof of stake type of assets, or generally speaking, you're concerned about crypto agility, you may want to rethink these types of solutions. Cryptographically enforced risk-based policies. This is also very important for custodians. A custodian with, I would say, old type of fiat asset has all these security measures in place and all these application security rules that say this person has touched this type of asset at this, millisecond. Everything is time-stamped. With HSMs and multisig, this is not the situation. You do not have cryptographically enforced risk-based policies. You do have on-chain with the multisig type of solutions, the actual signers, but I don't know of any custodian they would require only 2 out of 3 type of forum to approve a transaction. You would usually have this type of policy. You could have the customer approving, pretty much like signing any type of check. You would have the customer approving something. You would have an AML officer, a compliance officer, a fraud machine type of bot or officer. You would have operation approvers. And for VIP customers, you may have a trustee. How do you get this into a multi-sig type of solution? So most times you cannot do so. You have to add layers, application security, customizably coded into the platform to be able to support such a policy. And therefore, the cryptographically enforced, I would say, emphasis of these 2 words, you're losing that with blockchain type of solution requirement. With MPC, it's with Unbound MPC, I would say this is a non-issue because we're multi-party, and therefore being able to spread the key to, as you can see here, I think these are 9 approvers, I'm not sure. And each of every one of them, once they're signing, you can actually know that they have signed or declined the transaction. Now, this is a summary table of what I've just shown you. There's, I would say, a more in-depth type of presentation that I can share later on, explaining and really diving into each and every one of the parameters, but simply being respectful of everyone's time. I think this is it for today. I want to move on to the demo. Any questions so far, maybe?
Not right now. If you have questions, just post them in the group. There's one for Philip, but I think we do this later after the demo.
Okay, so summarizing the presentation, we see that people are very much going through this security journey. They don't like HSMs, but they start with HSMs simply because this is their ecosystem, this is their comfort zone. They already have HSMs in the organization. They don't know of anything else. They might consider multi-signature as a next step, moving on to MPC is not me saying, that's actually Gartner's prediction that this is a journey and this is where people would go years from now. So demo-wise, I want to show you two demos out of several, as you can see. I want to demonstrate, and leaning on Philipp's demo, I would use, this is also a clip because you'll see we're going to use smartphones to approve a transaction. Now, this meetup was supposed to be a physical one in Frankfurt, so we were actually planning on a really cool demo where people in the audience would hold their mobile phones and take actual interactive part in the transaction approval. Unfortunately, you know, with the COVID-19 thing, we cannot do so. So we filmed the demo where smartphones are being enrolled and taking part in the transaction. So in this first demo, I'll actually create a vault where there are policies, you can see, and then we'll see how the approval of this policy goes on. So we're starting the vault definition with the type of assets and the general details. Let me just go briefly back to emphasize something. You see also sub-accounts, so there is support for deterministic vaults. Moving on to the definition of an admin group. Now, an admin group, also using MPC, is an important group because we do not want anyone else to, let's say, break into the system, even if they manage somehow. But, you know, security is a layer type of architecture. Regardless of Unbound, you build more and more layers to, I would say, make the life of a fraudulent user more tough. So in this case, this is the admin group of the vault. So any change to the vault, to the policies, to the quorum would have to go through the admin group first. In this case, this is a mistake by the way filming the clip. It shouldn't be 1 out of 2. It should be at least 2 out of 2. But this is the admin group, all humans. And now we're going to add policies. Now, the first policy is going to be automatic day trading. It's going to be for small amounts, as you'll see. And since these are tiny amounts that would want to empower the organization to have automatic trading, let's say, utilizing opportunities out there, we're going to use only machines, AML machines, anti-money laundering and fraud machines. The policy, as you can see, is 2 out of 4, 1 out of 2 in each group. There is no limitation as to the number of groups. This is just for the demo. And you'll see that it's for a BTC type of asset, and the maximum amount is going to be 0.05, which is kind of a sandwich type of amount. You can also define the, or used to be, the day of the week and the time of the day. So as you can see, these are weekdays and business hours. And now the policy has been added. Now, adding additional policies, now it's going to be manual day trading, and one could guess that for this type of policy, where we want manual approvers, probably the amount is going to be higher. Firstly, we define the groups. And the people, here you can see actual humans having to take part of the operation. So the policy, as you can see, in this case would be 4 out of 6 in 2 groups, 2 out of 2 and 2 out of 4, where one group has only machines and the second group has at least 2 humans. Moving on to the definition of the amount rules, you will see that the minimum amount is going to be actually the maximum amount of the formal policy, and no limit as to the maximum amount, meaning any type of amount above that minimum would go through this rule. Also weekdays, daytime hours, but you can imagine weekends, nighttime hours. Now, just a minute. Once creating the vault, the key is actually being created in a distributed manner and shared using between the various parties. In this case, we have, you know, 2 policies. We also have the admin group. So each of them actually gets a share dependent on the policy itself. So each policy, each quorum has their own key, and the key is being shared. So no key exists in its whole entity, and the key is actually being created in a distributed manner. Also, upon the creation of a vault, the backup key is created in a distributed manner. And this is the only time through the process that it takes a bit more time. But if you remember, if we started the conversation, these 3 dots that were moving just now, 10 years ago, took 10 minutes or so, 9 minutes. And now it took, as you can see, I think a second or something like that. I see the time is working against us. So let me, okay. So I'll demonstrate it very fast. Now, each of the approvers, remember, we have, I think, 4 human approvers. So each of them has to approve the joining of this vault, meaning the getting of the key share. This is in addition to biometric-based authentication, therefore multi-factor authentication. So whenever, so there were 6 of them. So whenever a human approver approves something, they have to go through a multi-factor type of authentication, in addition to using a password-less type of approval using the key share. So this is actually going to happen now 4 times. So let me fast forward that. And now we actually have a vault that has been initiated. I don't know, Ayan, do we have time for another demo just to see the withdrawal, or are we done time-wise?
Yeah. I mean, we have time until 10, so 7 more minutes. And right now there's like 1 question for Philip.
So I'm not going to demonstrate the deposit. The deposit is pretty easy, as you know. I want to move on to the withdrawal to demonstrate the actual withdrawal. So we're going to withdraw here 2 types of amount, the smaller amount. So you could see, it's going to be very fast, and the higher amount, just to show you how it's working. This is, by the way, a demo, quite old one, so the whitelist feature is not in yet. But as you can see, the amount is very small, so it's going to happen really fast. We didn't see that because these are bots, but the 2 bots, as you can see, are the ones that, remember the AML machine and the fraud machine? We need 2 out of 4, and we got this approval very fast. By the way, performance-wise and latency-wise, this is just 1 hop of data. And of course, we can see the transaction on the blockchain itself. So this is for the small amount. Now, one can very easily imagine the potential of doing all these automatic trading based on various types of derivatives, etc. You know, once you trace an opportunity and pre-program it. This is the second withdrawal, and now we're going to have a larger amount, a higher amount. Now, this amount, if you remember, requires more approvers to approve it. Okay, so these are going to be the required approvals for members out of 2 groups. If you remember, at least 2 humans. Now, had it been the actual meetup, now we would have people at the audience raising their phones and saying, I approve or don't approve. But now with the clip, we can see, I think this one already approved. you can see what they're getting. They're getting a notification. They're entering their biometric information, whether a fingerprint or an iris or whatever, and they approve. So the first two that approved it are the ones that move on. This is the threshold. And as you saw, they didn't have to click anything. They did not have to remember any password, and still it's very secure. And we see here who approved it. So we have the AML machine, the fraud machine, and 2 humans out of the 4, and we know who these humans are. Everything is, of course, logged into a tamper audit, tamper-proof audit log. Yeah, and that's it. So this was, I would say, the ecosystems, the considerations, and a short demonstration of how one would define risk-based policies using MPC. Thank you.
All right, thanks a lot, Rebecca. So Philip, there's one. So to all the people in the audience, if you have questions, now is the time to write them in the WhatsApp group. If you are wondering now where you find this group, check your emails. You've received an email with a Zoom link before the event, and there's also the link to the WhatsApp group, so you can just post it in there. And the question to Philip is whether you can elaborate again on why exactly you have 2 bots. I think it was about security, but maybe you can elaborate a little bit on this.
Yes, sure. Thank you, Jan, for the question. Actually, we have two bots, or we have even 3. And the purpose of that is the redundancy. Because imagine you have only 1 bot running instead of 2 or 3, and somebody hacks this bot. Some attacker just cracks this bot or whatever, and change the code on that bot, for example. Then he can do with this bot whatever he wants. You can approve anything. So here the purpose is for having 2 bots is a redundancy. So even if 1 bot is hacked, you still have 2 other bots maybe that do the same policy again, and by that you cannot really hack the policy itself. And so you can, for example, you could distribute the policy bots geo-redundantly. So one policy bot runs in one city, the other in the other, on different infrastructures and so on. So in order to hack the policy itself, you would need to hack all bots at the same time.
Okay. I hope that answers your question, Jona. All right. Yeah, I don't see any further questions. Rebecca and Philip, maybe you can also join the WhatsApp group. I'll send you the link if you haven't joined yet. If there's more questions coming up, you can answer them there directly. And Rebecca, you mentioned you want to share the pitch deck, so just do it there. It's the easiest way to directly interact with everyone who joined today. And
yes, absolutely.
Yeah. All right. Yeah, with that, I'd like to close the session just on time. Thanks a lot for your presentations, and I wish you a productive day.
It was a pleasure. Thank you too.
Yeah. Thanks, Philip. Thanks, Rebecca.
Bye-bye.
Bye.